Hello and welcome to this weekend's market update. Today is 29th of April 2023. So let's just review how the week went. So this is S&P 500. We're looking at a 15-minute chart. So you'll see that S&P 500 opened right here and tried to rally but encountered resistance at the weekly central pivot range. The blue line is the central pivot line, the weekly pivot line, and the three lines together form the central pivot range. And you can see that this acted as a resistance, pullback, made another attempt to overcome this level, got rejected. The green one, the first green line is the weekly support one, S1. So it spent a little bit of time there, then couldn't hold that level, fell. And then fell all the way to weekly S3. This is weekly S2 and this is weekly S3. Now it's very unusual for a major index to fall to the weekly S3 in the first 3 days of the trading week, and this is basically where it found support. I tweeted this level through my Twitter account on Wednesday. I think this happened on Wednesday. So you can follow me on my Twitter account because I don't make these videos on a daily basis. So this is my Twitter account. Link is in the description. So I do provide update through market hours. Coming back to this, so it found support at S3 and then rallied and then eventually managed to take out the central pivot range and then close right here. This red line is the weekly R1. This is the resistance level. So you can see that the first part of the week, the first three was a negative trading sessions, and then Thursday and Friday was very strong. And this was because of stronger than expected earnings from Microsoft, Google, Meta, even Amazon. So finished the week strong. Started the week right here, finished the week right here. So it was a positive finish. If we look at Nasdaq just to see how Nasdaq did, so you can see that it also started off right here, found resistance at the weekly pivot level, backed off, and then fell all the way to weekly S2, and that's where it found support, and then it gradually moved higher, took out the central pivot range, took out the weekly R1, resistance 1, and finished right at the high of the week. So strong looking finish, weak start, strong finish. So that's, so that was basically quite volatile, by the way. So coming back to the daily, so this is basically what the daily pattern looks like. You can see that, two big red candles on Tuesday and Wednesday, and then big green candles on Wednesday and Thursday. Now, to analyze the price action, it was looking bearish for a while because this was the previous support level right here. And that's where, and it closed right below this level on Tuesday. And then there was a follow through on Wednesday, but the bears were unable to capitalize on it. The bulls quickly regained control and pushed prices higher. And look at where it finished. It finished right at the previous previous swing high right here, set on 18th of April. So effectively what happened is that S&P 500 has now defined this to be the range on the upside, and this is on the downside, and it closed right at this range. Now, a couple of things. Now, if it's able to get through this level, break out to the upside, ideally you take this range and you double it, and that's basically the next potential upside target, which is where? Which is around 4,300. So if I just zoom out a little bit so you can see, so that 4,300 basically takes us close to the August highs. So at the moment, technical picture, the price action definitely is looking more positive. If you look at the momentum indicators, RSI and MACD, you can see that RSI had dipped below the 50 level on Tuesday and Wednesday, but it recovered by the end of the week. So RSI is now back above the 50 level. So that is positive, but MACD never fell below the zero line. So at the moment, I would say that the price action and momentum indicators look more positive than negative. So the bias is still to the upside. Now that said, next week we have couple of key events that could basically move the market. So Wednesday we have the FOMC meeting where the Federal Reserve is widely expected to increase Fed's fund rate by about 25 basis point to 5.25%. And generally, Federal Reserve doesn't do doesn't go against what the market is expecting. So if the market is expecting 25 basis point, I think the Federal Reserve will do that. The question is, what happens after that? Now, there is expectation, there is, I would say, based on the yields that I'm seeing, which I will share soon, that the market is expecting a pause, that the Federal Reserve. That's because of the fact that there is still some concern in regards to the regional banks. This week, First Republic had financial difficulty, and there are talks that somebody will take over the assets of First Republic. So there's still some concern in the financial sector, and many are wondering whether the Federal Reserve will pause to make sure that things don't worsen for other banks in that area. So that's basically that's the first of the two. The other one is the Apple earnings, which comes on Thursday after the market close. Now, so far, what we've seen is that earnings from the big tech companies, Microsoft, Google, Amazon, Meta, they all came in above expectation, and for the most part, the stocks reacted positively, and the market moved up. So the question is Apple going to do something different, or is Apple going to basically come in with stronger than expected? If Apple comes in stronger than expected, I think that Apple's earning and the FOMC could be the catalyst for, I think, a big move to the upside. Because if you look at S&P 500, if I look at the weekly chart of S&P 500, you can see that it's basically trading in this range, 4,200 on the upside and 3,800 on the downside. I think there's an opportunity for an upside break, and that that could be as a result of one, Fed pausing, and second, Apple's earnings, which may come in better than expected. If those two things come in, I can clearly see an upside breakout to the from this range. So we'll have to wait and see whether that materializes, but those would be the catalysts that could basically get S&P 500 out of this range. And I would say, based on the technical pattern, the bias is to the upside, because you can see that the momentum indicators are quite strong. RSI is above the 50 level, MACD is above the zero line. So the momentum indicators suggest that the market wants to take the market higher. That's that's the indication I am getting from the momentum indicators. So we'll have to wait and see how things materialize. But on a daily basis, as I said, so if we break through this level and establish a new swing high, the ideal price target, the next price target would be 4,300, which is basically taking this range and doubling it. That would be the target, 4,300, because it has established this trading range. Now let's have a look at NASDAQ and see what do we see in NASDAQ. So here's NASDAQ. So if we look at the price action, first of all, you can clearly see that NASDAQ also did break below this level. So this was the previous swing low, which was from April 12th. What's this level? This level is around 12,850. So NASDAQ did fall. So the bears had an opportunity to capitalize on this, but stronger than expected earnings from Meta, later in the week basically negated that, and bulls came back and pushed Nasdaq higher, and not only Nasdaq recovered this level, but Nasdaq closed above this previous high. You can see that previously this level acted as a resistance right here, but Nasdaq managed to close slightly above that level. So this is about this level is around 13,210. Now, having traded in this zone, a full measured move of this range would project a target to this level. So what is this level? So this is around 13,700, and you'll notice that this target exactly matches the August high. So if you take this distance right here that it has traded in the last couple of weeks, and a breakout of this range would project a target to this level, which basically is where the August high is. So this is this is proofing out properly. So that indicates to me that that's basically where it wants to go next. But we still have to get through the FOMC and Apple's earning, but that is the ideal price target based on the previous consolidation. Momentum indicators for Nasdaq, they're all positive. You can see that daily RSI dipped below the 50 level, so there was some concern, but it managed to recover. You can see that previously also it spent so this was from March when RSI dipped below 50, but for a brief period of time. So Nasdaq's momentum indicators still remain positive. Now if I look at Nasdaq weekly chart, where is Nasdaq? So if we look at Nasdaq's weekly chart, you can see that it's also looking quite positive. The only thing I would mention is that Nasdaq has been on a weekly basis trading on a small narrow range. So generally when you see a contraction in range, it usually is followed by an expansion in range. So I get a feeling that we could see an expansion in range coming. So the question is whether it's going to be to the upside or downside. But I would say based on the momentum indicators, that looks like a more to the upside. You might say that this is like a bull flag consolidation, and we might be able to see a breakout of this consolidation to the upside. So that is basically based on the chart pattern, but we'll have to wait and see how things play out from the FOMC meeting and Apple's earning. If we look at the QQQ and SPY very quickly, you see similar patterns. So on a daily basis, so let's look at SPY daily. So this is SPY daily. So on a daily basis, let me just expand it so you can see that. So on a daily basis, if SPY is able to take out this level, the next target would be this level around 428. That would be the ideal target based on the fact that it has traded in this zone. And if we look at QQQ, so what are the levels? So QQQ, clearly you can see that it established a new swing high. It has taken out this level. So the next level would be this level, which is around 334. So if I just zoom out a little bit, you can see that relates to that takes us to the August high. Once it's able to based on this trading range, it now projects a target to 334, which basically is where the August high is. So those would be the levels, and support on the other hand is where the red candle is, which is around 310. So a close below there definitely would be negative. So that's Nasdaq. So let's just look at Dow and Russell 2000 just to see what we see. So Dow Dow is also looking quite strong right now. You can see that Dow is closed above this previous swing high. So if I just adjust this little bit, you can see what the projected potential target is on the upside. So Dow is basically projecting a target to around 3,500. So this would be around 3,500. That's also looking strong. You can see that if that happened, Dow will establish a higher low. So this is also looking positive. The only one which among the four averages which is not yet rallying is Russell 2000. So you can see that it's kind of stuck in this zone. So this is the upper end of the zone, this is the lower end. In fact, you'll see better if I show it to you on a weekly chart. So if you look at, this is Russell 2000, whether you look at Russell 2000 or IWM, it doesn't matter. You can clearly see that it's been stuck in this range for a long time. You know, you might say this is a bear flag consolidation. I won't disagree with that. Momentum indicators are also weak. But my thing is that if S&P 500, NASDAQ, they're showing signs of going higher, then I don't think it's gonna fall. If that's the case, eventually I think this is gonna break out of this range to the upside. I don't think it's gonna break out of this range to the downside if, let's say, NASDAQ and S&P 500 are moving higher. So it's a matter of, I mean, this would be the laggard. I mean, even if it's, breaks out of the zone, it would still be a laggard. But I don't see this going in opposite direction to S&P 500 and NASDAQ, because if they're showing an upward bias, then I would think that eventually it's going to break out of this zone to the upside. You can see that RSI is still kind of weak. So this is the weak spot, I would say, at the moment, only because this one has a lot of financials, industrials in it, and healthcare to some extent, and those haven't been bulling, and that's why this has been a laggard. Now let's have a look at the sectors, and let's see what the sectors are telling us, or how we should be positioned. So this is my sector map. This is the SPY ETF. SPY ETF has 11 sectors as shown right here. These are the symbols and their weights in the sector. So I've basically categorized them into two buckets. So this is the bucket where I think, where I see positive price momentum, where the momentum is positive on a daily basis. They're mostly positive with the exception of financials and real estate. But I'm seeing some improvements. But these other four, they're kind of neutral. They're not doing much, but they're not, with the exception of industrials, they're kind of lightweight. So let's talk about them. XLK. So let's have a look at XLK. This is the heavy, this is the strongest sector. So let's look at XLK. Where is it? It's right there. So you can see that XLK had a strong week, and you can see that it's been making series of weekly higher lows. Good looking candle. So I see further move to the upside. Momentum is strong, and if I look at some of the the bigger stock in this sector, for example, Apple. So look at Apple. Apple basically is breaking out of this downtrend. So Apple is looking quite strong. Another one which is another stock which is in this sector which has a very strong momentum is Microsoft. Let's see if I can find Microsoft. Is right here. You can see Microsoft basically is broke through this previous high from August. So this is a strong looking weekly chart. If you look at Nvidia, so Nvidia looks very strong. This looks more like a kind of a bull flag consolidation to me on a weekly basis. So when I look at these three stocks which which moves the market, they're all looking more positive than negative to me. So I would look for more long opportunities in this sector. So in addition to Nvidia, on the semiconductor side, these two stocks, I would also watch them, Micron and CRM. Let's look at the financials. So the financials, as I said, on a daily basis, I am seeing some improvement on financials. So let's have a look at financials. Where is let me just pull up XLF right here. So you can clearly see that it found support right here. You can see that series of higher lows being formed. But if you look at on a weekly basis, it needs to get through this level. You can see that this is an area of resistance right here. So it needs to get through this level. Also, you can see on a weekly basis, RSI is not is below the 50 level. So it looks like on a weekly basis, it still needs work. But on a daily basis, I'm beginning to see some improvement. RSI hasn't RSI has moved above the 50 level, above the 50 level. MACD is just crossing above the zero line, so there is some improvement on a daily basis. You can see that clearly found support right here. So if financials also get in gear, and technology is already in a very strong technical pattern. Another one is communication, XLC. So let's have a look at XLC. So this is XLC on a daily basis, but you can see that XLC established a new swing high. If you look at the weekly chart of XLC, I mean, that's looking even more impressive. So you can see that XLC has this inverted head and shoulder pattern. This is an area, if it can get through this area, which most likely is going to happen based on the fact that the momentum is quite strong. So I would also look for long opportunities in XLC. So in XLC, the stocks I like are Meta, Google, Netflix, and Disney. So let's have a quick look at Disney. I want to look at Disney on a daily basis so you can see. So let's pull up Disney. So here's Disney. So you can see that it closed just above this previous high right here. So it's been trading in this zone and it looks like it wants to go higher. So I would watch Disney. So this is looking better to me. So these would be the stocks I would be watching on the long side. If I look at discretionary, which is also another growth sector, so if I look at discretionary XLY right here, you can see that it's kind of inside this trading range. It hasn't broken out, so I need to see a close above this level. If so, then that would also push S&P 500 higher, because this is a growth sector, so any move to the upside is going to put upward pressure on SPY. Now Tesla and Amazon are the two biggest component of XLY. Now Tesla hasn't been very strong, and Amazon, although it has gone up recently, but after the earnings it reacted negatively. But there are other stocks which are doing better. I like the retailers in this sector. Keep an eye on eBay and Ross Store in that sector. Let's look at healthcare, because that's another big sector. So you can see that after this big move, they're kind of chopping around. So after this big move, it's now formed a lower high. So this is a little bit concerning. So I just want to see whether or not, but the momentum indicators are positive at the moment. You can see that RSI is above, the 50 level. So as long as RSI remains above 50, I would think that this weakness is temporary, and I would expect it to move up towards the top of this range. So I would, I like healthcare as well. So I don't have any specific recommendation on healthcare. The other ones that I would watch would be on the staples. The staples has a very strong looking chart, but the risk reward is not favorable. The only one that I like is Kellogg. So overall, when I look at the positioning of the sectors, they look more positive than negative to me. So almost 80% of them have a they have a potential to move higher. This is not to say that these other sectors are not going to move higher. They're kind of going sideways at the moment. So I would focus on these sectors for long positions. So if they move higher, they're going to put upward pressure on S&P 500. So that's basically how I'm looking at when I'm trading S&P 500. Now, if I look at other other markets like the bond yields, so let's look at bond yields. So this is 10-year bond yields. It's basically going sideways. It's stuck in this zone. Maybe we'll get some resolution from after the FOMC meeting, but I'm not seeing any bias either to the upside or the downside. Kind of stuck in a range. If I look at the futures market to see what they're telling us, so this is the Fed funds futures for September. It's at 5%. So basically, the market is not expecting. Basically, the market is expecting a pause after the next week's meeting, because otherwise I would expect this to be well above 5%. It's not. It's at 5%. If I look at the October one, October is at 492, which is around 5%. This is also basically, suggesting that market is not expecting anything after any rate increases after the May meeting. And then if you look at the November one, which is at 4.73. So in November, market is expecting a small cut, and that's because there is still a concern that there might be more banks having financial difficulty, or we might have a recession later in the year. So that's why the Fed funds futures for November and December, they're kind of pricing in at least a small rate cut, maybe 25 basis point, because of this banking crisis, which is hanging overhead. If I look at the dollar, dollar is not doing much, kind of stuck in this zone. So it needs to decide whether it wants to move to the upside or to the downside. Found resistance, at this level. I'm not expecting any significant move to the upside, because I don't believe that the yields are gonna go up that much, from current levels. I don't believe that 10-year yield or 2-year is going to rise significantly. When I say significantly, I mean so this is 10-year. 10-year is at 3.4. I don't see 10-year yield, above 4%. If we look at 2-year, 2-year is at 4%. I don't see 4-year around 4.5. Those levels. Yeah, they can move up to 4.30 again, but I don't see anything significant to the upside. That's why I'm not that bullish on a dollar. There could be a small trades, but I'm not expecting dollar to basically say break this level. So not at the moment. I'm not expecting that. And then finally gold. If I look at gold is basically chopping around in this range. So if dollar doesn't make any significant move to the upside, I think gold can basically go sideways and then maybe resume its move to the upside. But if dollar rallies a little bit, then I could see gold coming back down a little bit. But overall, I would say that yields, dollar kind of sideways to down, gold sideways to up. Same with silver. So just to finish off, so watch SPY. I think the bias is to the upside based on the pattern I'm seeing. FOMC meeting, Apple earnings key. I think if the market reacts positively, then I think that could be the catalyst that pushes S&P 500 out of that 4,200, 3,800 range. And I would say the break would be to the upside and not to the downside. That's basically my current view. But once I see more price action, I'll then decide whether or not my view changes or not. I'll leave it at that. Thank you very much for watching the video. Please consider subscribing, sharing, all of that stuff. I hope to see you again in a future video.